Hi, this is Ian Coleman, and this is this week's video analysis for the week 22nd of April 2019. Just coming in after a long bank holiday, Easter weekend. Market's pretty stable at the moment. We're expecting volatility to continue to be pretty low. If you look at the VIX index, it's actually, well, it has been at levels not seen for 2 years on the low side. And we're expecting that to continue while this dollar continues to consolidate. So this is the weekly chart. We can see here basically for 35 weeks now, if we put a cursor across the top of that wedge formation, there's really been little net movement for a prolonged period of time now. Even if we look down to the MACD, we can see that the trend lines, or the MACD lines, are pretty close together, and that highlights that we're consolidating. We do look to be forming an ending wedge pattern. There are a few dollar majors that are up against resistance or dollar resistance levels, so there is scope for movement really in both directions. We've got a 61.8% Fibonacci level located at 97.86. I don't think there's any indication that we're not going to reach that level, and then we've got trendline resistance up here at 98.87. So we're expecting the markets, or at least the dollar majors, to remain mixed and volatile while we stay inside this wedge formation. The long-term bias has still got to be to sell into rallies. Short-term bias is probably mixed across the board really. Let's go and look at euro dollar first. We've got this large wedge formation. We did break it to the upside. We had 2 days where rallies were rejected, and then we've moved back inside this wedge formation on a break of trendline resistance, which is located at 113.40. Then the measured move target is up here at 118.17. However, there's really no clear indication that this move to the downside has come to an end. We saw pretty strong selling pressure on the 18th of April. And again, this is just bank holiday Monday movement to the upside. 113.04, we've got bespoke resistance. So we really need to break this resistance level to get the next move higher. To the downside, just get our trend line. Again, there's so many different trend line supports because we've had this consolidating and choppy price action. The first trendline support is located around about 111.26, and then the wedge base down here, which is 110.55. Again, the long-term bias opposite to the dollar index is to the upside, but intraday, I think we're just going to get chopped around. And if you do take our intraday analysis, you will have noted that we're probably triggering less and less trades at the moment because we're getting those periods of consolidation, and what we're looking for is extreme price levels to jump on those moves. Cable, I want to show the monthly chart first. Actually, here we've got this large ending wedge formation, a break to the upside of 136, the figure, and the measured move target is all the way up here at 171.92. Got to remember, this is the monthly chart, but we did post a bullish outside month going back to January 2019. We've also posted a perfected 9 count on DMARC. As long as we don't get a monthly close below 127.40, then the long-term bias remains bullish for cable. If we go to the daily chart, however, this looks to have formed a descending triangle pattern. Yesterday or Friday's dip has found mild buying close to the previous support level. If we break there, then the measured move target is down here, which is at 125.88, and is also close to this 78.6% Fibonacci pullback level. So at the moment, we're still trying to catch any corrective rallies to the upside. We've got trendline resistance at 130.80. But we haven't got any bespoke resistance until 131.15. So we wouldn't want to see a prolonged break of this trend of lower lows. But at the moment, we're still looking to catch rallies for a move lower in cable. Dollar Swiss, and this was the one that I was talking about. We've had mixed trading for the last 77 weeks, formed an ending wedge pattern. Last week we saw some strong buying pressure. It's left a Marabuzo level around about 100.75. We've got bespoke support at 100.67. So even though we're probably going to see some limited buying this week, the intraday bias is still to buy into dips around that support level. Dollar yen, I'm going to show two charts here. We've got a trend of lower lows. Lower highs coming at 112.80. We can note little net movement last week, but also no clear indication that this rally has come to an end. If we go to the daily chart, we've got scope for an Elliott wave formation. Got to remember 112.80 was that trend of lower highs. As long as this wave breaks the top of wave 3, then it could be seen as a fifth wave, and the fifth wave is always the hardest to predict. At the moment, we've only got bespoke support at 111.20, so basically ranging between this resistance level and this support probably for the majority of this week. Dollar CAD, and again, pretty wary of a prolonged move to the upside, just on the basis of the dollar index bias. However, got to remember we're sort of correlated with oil at the moment. Pretty lot going on fundamentally with oil at the moment, so we could see a break to the upside, but the long-term bias is still negative. If we go to the monthly chart, we've got a bearish outside month, often indicates the end of a trend and a new downward bias. We can also note that levels close to the Marabuzo level, which is around about 134, the figure, continue to attract selling interest. And if we go to the weekly chart, we also got a bearish outside week close to the 61.8% Fibonacci pullback level at 136.86. We can also note that the whole move to the upside has been mixed and volatile. When we go to the daily chart, again consolidating in this triangle formation for the last 31 days. We have been lucky enough to get into buying dips, but like I said, the upside might also be limited. 133.35 is bespoke support going into this week. If we break this level here, I would be wary just for a potential spike, but if we clearly break it, then the upside target is at 136, the figure, which is the flag target. Aussie dollar, and again, the long-term bias remains bullish. We look to have completed a 5-wave Elliott wave pattern to the downside. Seen pretty mixed volatile trading for probably about 5 weeks now. We did have the flag formation target, which we focused on last week. We didn't make it actually. 72.15 was the target level, and I think we made an upside print of 72.06, so 10 ticks short of the flag target there. Looks like a bullish head and shoulders pattern. We've got reverse trendline support located at 71.26. We've got bespoke support at 71.10. So again, going into next week, really looking for limited selling in Aussie dollar. Euro sterling. This was actually one of my favoured setups for last week. We had bespoke resistance at 86.77. We haven't got any support until 84.75 to the downside, and we did clip it, but we sort of consolidated. I'd still favour selling into rallies as opposed to buying into dips, just for one more leg to the downside for euro sterling. Euro yen, I'm just showing the intraday chart here. The longer term charts, it's very hard to get a bias on this cross currency at the moment. Looks to have completed an Elliott wave formation to the upside, bespoke support at the beginning of next week is at 125.46. Again, the medium term outlook is pretty mixed, so we're just concentrating on the intraday calls at the moment. Okay, I hope you've found that informative, and we'll be back again soon. Many thanks.